This week, the dust settles for Bitcoin following huge losses in February. CNBC speaks exclusively with crypto industry leaders and lawmakers from World Liberty Financial's forum at Mar-a-Lago. And Dragonfly Capital general manager Rob Hadick discusses the company's $650 million fundraise backed by institutions like JP Morgan and the Rockefeller Foundation. Welcome to CNBC's Crypto World. I'm Ryan Baker. Crypto markets mixed this past week. As of noon Eastern, Bitcoin lost about 0.5% from 1 week ago. But that's a marked improvement from the dismal February the cryptocurrency has had thus far. Bitcoin's down 23% since the start of the year. Ether's having a better week though. It's up by more than 1% since last Wednesday. XRP fared even better, rising nearly 6%. Just yesterday, Coinbase Institutional's John D'Agostino joined CNBC to weigh in on recent volatility. He provided a long-term bullish outlook, pointing to Bitcoin's strong historical performance despite previous downturns. And he refers to new price ranges as emotional breakpoints.
There are emotional breakpoints. 100,000, I think, was an emotional breakpoint on the upside, where a lot of people who've been holding it since $1,000, $2,000 said, okay, now I can kind of delever and or take some risk off. I think any handle, 6 handle, 5 handle, 8 handle, 9 handle, 10 handle, is an emotional breakpoint. In terms of the technicals, that varies based on momentum.
Okay, let's catch you up on the latest stories from the past week. Crypto exchange Gemini is facing a shakeup amongst its executives just weeks after cutting a quarter of its staff. The company founded by the Winklevoss twins disclosed that its COO, CFO, and CLO would be leaving. Gemini also said it has no plans to backfill the COO role. Earlier this month, the twins shared in a blog post that Gemini cut roughly 25% of its employees as developments in AI accelerate and streamline software engineering. In that same announcement, Gemini also revealed it would stop operating in the UK, EU, and Australia as it shifts its focus to even more on the US. Galaxy shares have dropped about 22% month to date. Next, crypto payments to suspected human trafficking networks surged 85% last year. That's according to a new report from blockchain analytics firm Chainalysis, which says that most of the activity is linked to the growth of Southeast Asia-based scam compounds, gambling operations, and Chinese language money laundering networks. Despite the geographic concentration in Southeast Asia, bad actors have funneled money all the way from North and South America, Europe, and Australia. Payment methods vary depending on individual illicit categories, but the report shows prostitution networks and Telegram-based international escort services relied heavily on stablecoins, while inflows to child abuse material were predominantly in Bitcoin. Last, the Trump family's World Liberty Financial held a conference at Mar-a-Lago this morning, and CNBC was there to give you some of the highlights. Speaking to us exclusively, Ohio Republican Senator Bernie Moreno says the Clarity Act could become law by April. He said he believes allowing rewards on stablecoins, which is a key holdup issue lawmakers are hashing out with both the crypto and banking sectors, would benefit U.S. consumers.
What it means is that the cash that you hold, you're going to have competition to pay you more interest. So you're going to be able to get more money for the money that you have in your wallet or the money that you have in some sort of account. So this is very, very good for working Americans, because ultimately this is about giving Americans more rewards for being able to have cash on reserve, be able to get paid quicker, be able to transact faster, democratize the financial systems.
Next to him was Coinbase CEO Brian Armstrong, who argued the Senate Banking Committee's draft of the bill had too many issues. Progress on that bill stalled after pushback from the industry, but Armstrong was hesitant to agree that he blocked regulation from passing.
One of the big issues that did come up in the past was this idea of stablecoins on rewards. I wouldn't say we blocked it. In fact, nobody, I think, in the crypto space has been working harder on this over the last few years to try to get some legislation. What we did say was the current draft, we had some issues with it. I think that caused everyone to come back to the table, and there's now a path forward where we can get a win-win-win outcome here. A win for the crypto industry, a win for the banks, and a win for the American consumer to get President Trump's crypto agenda through to the finish line so we can make America the crypto capital of the world.
Also speaking to us exclusively were World Liberty co-founders Donald Trump Jr. and Eric Trump. They broke down today's event and said that the goal is to create opportunity for crypto and TradFi to work together, even after the family has argued the traditional banking system has shut them out.
To be able to come back and now work with the best in crypto as well as the best in TradFi, get these people together to create efficiencies in a system that's otherwise been totally undemocratized and broken and inefficient and slow. To be on the leading edge of that is just really exciting.
Event guests include Goldman Sachs CEO David Solomon, NASDAQ CEO Adena Friedman, CFTC Chair Michael Selig, FIFA President Gianni Infantino, and Nicki Minaj. The Trump family's involvement in crypto made them billions of dollars in 2025, but also drew criticism from Democrats who argued those crypto dealings were influencing regulatory decisions and could present a conflict of interest. The White House has said the president's crypto holdings are in a trust managed by his children, and in previous interviews with us, Eric Trump has dismissed concerns around a conflict of interest. All right, for our main story this week, Crypto World's Liz Napolitano spoke with Rob Hadick, general manager of crypto VC firm Dragonfly Capital. The company announced it raised $650 million from institutions like JP Morgan, Harvard, and the Rockefeller Foundation. We asked Rob about raising funds in a risk-off environment and some of its recent investors.
So you just closed your fourth fund worth $650 million at a time blockchain VCs are facing a mass extinction, as you called it to fortune. Family offices and accredited investors have shied away from risk-on investments in recent months, and universities and their endowments are facing financial pressures from House Republicans and the Trump administration. How did your firm recalibrate, if at all, to raise in that kind of difficult, challenging environment?
Yeah, what we found to be true, and a lot of the people that you just talked about, a lot of the types of investors you just talked about, they're investors with us, right? And they've been LPs both in this fund and the last fund as well. And what we found to be true when we were talking with them, when we were raising capital, was that they were looking for firms that had a broad set of expertise, people who understood how traditional market structure worked, understood how crypto worked, understood how blockchains worked, were able to bridge that gap, understood that this is a space that is reinventing financial rails, reinventing how fintech will be done in the future, and is able to see that future very clearly, but also underwrite in, I think, a very unique way what that future looks like. And so as some of our portfolio companies have really shown to be growing and creating that future, the poly markets of the world on the prediction market side, or the Rains of the world that is changing the way stablecoins are used within card settlement, it started to allow for the market and for the investors to understand that the time is now. This is happening. 2025, 2026, we're going to see a real acceleration of this sort of financial revolution. And they wanted exposure to that. And so pitching that story about how the entire financial market infrastructure plumbing is going to work, that's what got people excited about the future.
Got it. Now, another thing that stands out about your latest fund is the support it's received from institutions, including JP Morgan and the Rockefeller Foundation. How have you balanced the need to operate according to those players' more stringent standards with your mission to jump on innovative investment opportunities at the earliest possible stages?
Yeah, so these investors, they're sophisticated. They want exposure to emerging technologies. They want exposure to where the world is going. They like asset managers and investors like us who can understand that, this is emergent technology that has to, often operate, at the edges of how, current market structure works, right? And that means taking risk. That means making sure that, consumers are appropriately protected, but that they are also potentially served in a way that doesn't fit the current paradigm. And so they're excited about what we're doing. They're excited about getting exposure to that. They're excited about the fact that right now, payments, stablecoins, prediction markets, market structure, decentralized and centralized finance, these are places where we're seeing mass disruption come to fintech and financial services firms alike. But we're also understanding that now the U.S. government and the global governments are also supportive of this change. They understand this innovation is happening. So when we see things like Genius Act get passed last year, when we see things like a Clarity Act or some sort of market structure bill pass the Congress this year, that gets these people really excited about the fact that there will be that regulatory clarity, and there will be, kind of interaction with this market, with this technology into traditional markets and technologies. And because there's that exposure from the government and willingness from the government to put the right frameworks in place.
Now, you mentioned the Genius Act and market structure, and that's something I actually wanted to get into. So Dragonfly has previously identified stablecoins as one of its major investment themes. Are dollar-pegged tokens still a major focus for your team as lawmakers are rehashing the yield-bearing stablecoin issue on the Hill? And what else in the space are you looking at?
Yeah, stablecoins is still a huge market for us, a huge focus for us. If you look across the fund, that's been probably our number one place where we've put money to work so far. This is all across, call it what I would call the stablecoin I guess everything that stablecoins do, right? And so if that includes the asset issuers themselves, so we're investors in a thing called Agora or Athena, which are trying to do different forms of stablecoins, whether Genius Act or non-Genius Act compliant, onshore and offshore, but also things like I mentioned Rain earlier, which is doing stablecoin settlement directly with Visa 365 days a year. And that is a market that with Visa has grown from basically not existing last April to now doing over $4 billion annualized in direct stablecoin settlement outside of traditional issuer rails. And we see that continuing to grow dramatically because it's a better way to settle through the issuing bank or not even having to use an issuing bank and then with the merchant acquirer. And so these types of kind of full stack solutions on the stablecoin side are really, really important for us. But we also are really excited about tokenization. We're really excited about continued innovation at the blockchain level. We're really excited about decentralized finance and centralized, market structure. And we're continuing to be focused on things like, AI crypto crossover, a place where, to date, we haven't necessarily seen much that we've really liked, but we expect to see, much more innovation at that level, in the future.
Now, shifting gears a little bit, your latest fund aims to support innovation globally. As you know, US-based crypto VCs have long supported founders here in the States, and many are deepening their investments across Asia as well. But are there any other regions Dragonfly is looking at that are, say, critical to crypto, but in your view have traditionally been overlooked?
Yeah, so like you mentioned, I think we were probably the first one to really focus between the US and Asia. We had this idea early on that a lot of what works in crypto is borderless, money movement of value for a global population, right? But that has included also investments in Latin America, which we've done quite a bit in recently, because there is a lot of US dollar demand, especially on the stablecoin side. And there's a lot of consumers who want to be able to interact with or work with tokenized assets as well, but also places like Europe. We did a deal actually in London as well, not that long ago, and in Africa as well. So we believe that this technology is bringing global economies and global consumers together, and we'll continue to focus on all of those regions.
Okay, that's all the time we have for Crypto World this week. We'll be back again next Wednesday, the 25th, and we look forward to seeing you then.